Hello, everyone. I'm Jean-Claude at Beyond Mystic, and welcome to today's edition of Beyond the Charts. With me, of course, is Mr. Martee Hibs, the market oracle himself. You can find him at bullshift2020.com. Martee, welcome back to the show, and Happy New Year. How are you, man?
Thank you, sir. I'm doing well. I'm a bit road weary. I've been away for a few days on the road, and the weather wasn't great, but I feel good for an old guy. And hey, we're in Canada in the wintertime. I'm as feeling as good as we can be for January in Canada, right?
And who says those Canadians are tough? Of course, we're tough. I was having that conversation in a show last night about how things are going. I'm like, Canadians are pretty tough. We're very polite, but once you cross that line, we're pretty tough. And of course, the weather is a big part of our makeup, having to endure all of that stuff. So yeah,
That's
thank
for
you.
sure.
Welcome back to the show, Martee. Happy you're here. Happy you're in good health. So. A lot of health and prosperity to you for 2024. Thank
Thank
you
you,
so
sir.
much
Appreciate it.
again.
Same to you.
Thank you so much. I appreciate that. Thank you, everyone, for joining us here today on the live interactive show. We're triple casting on Twitter today, YouTube, and also on Rumble. And so you can find us there on all of those platforms. And we'll try to take some questions as we go along. But first, so you and I haven't talked since December. You've been out there training some people here on all things having to do with commodity trading in the last couple of weeks. You're back now in your home. What are some of the maybe big highlights that you've seen since we've last talked on the show about where the markets are going? Are you looking at specific geopolitical events that are on your radar right now that are going to be affecting or that are already affecting some of your charts? Share that with the audience members. What's happening in the world right now that is
Well,
important to
I
scan?
guess we're on track pretty much the same way as we spoke in December. We're looking at a very volatile world that we live in, of course, and the main things I think that are showing up, of course, is the Middle East situation, whether or not we get an escalation in the next few months, which I kind of anticipate we may. There's always a situation with what the Fed is going to do, which obviously to me may not be in line with most people's thoughts because it's an election year. So it's not going to be the norm. Things are going to change. They're going to put on a different mask this year because the bottom line is they want to get reelected. Okay. So whatever it takes, well, they're going to try and do it. So between the Middle East, the dollar is how it's behaving. Cryptos, of course, did their thing. We were waiting for that big announcement on the ETF. Everybody was salivating and waiting to see what would happen. And I've got a clip that I did that day. I'll show you later to give you an idea of how our thoughts are on that thing going forward. So, yeah, there's lots in the news, lots since we've first spoken back in December. Yeah.
Yeah, lots going on. Let's go quickly here. You mentioned a couple of things. I want to get into this here, whether or not the Fed is going to stop a quantitative tightening here, getting into the election cycle and starting easing again and printing money. Where does this go? First of all, what's your take right now? Of course, there's the people on mainstream news giving their hedge and they're doing their dot plots here on whether or not we're going to raise rates or lower rates here moving forward. What's your specific take on that? And then how does that affect how you're going to be looking at the charts here for the next month or so?
Good question. Like I said, mine is not traditional, so most people may not like what I have to say about it. But generally speaking, I think the best thing to do if I was in their situation would be nothing, do nothing. They only need to be proactive when things start going the wrong way. And right now, people are accustomed to the rates being where they are. They don't like them, but they're used to it. In other words, they're waiting and with anxiety to see what happens. So here's my take on it. I believe what's going to happen, JC, is if necessary, they will reduce rates. Otherwise, I think rates will stay as they are as long as they can. But we're starting to see some things going on in the marketplace that may change their plans with regard to movement in the stock market and a few other things that we'll look at. I think they'll probably just try not to do anything. It's probably the best thing to do right now until they need to do something. It's better to be, have some bullets left in your gun.
They need some dry powder.
Yeah, some dry powder. Exactly. Yeah.
Well, given what's happening in China right now, too, let's put this in context. So as China stocks crash, Beijing proposes a multi-trillion market rescue package. There was something else. This one here, too. Futures flat after back-to-back record. China unveiling massive market bailouts here. They were talking about trillions of dollars over the weekend when I first saw this coming up. How is this affecting us, if anything? Is this segregated from the rest of our market? Has this reared its ugly head, or are we still, somebody's have their thumb on the scale, so to speak, and we're not seeing the results of what's happening here yet?
Okay, my my maximized like my thoughts overall on the global situation would be that we have us and them meaning the other side of the continent. When we're talking about Europe, we're talking about China. And it's a race to the bottom, in my opinion. So what's happening as things get worse, whether it's in Europe with the war in the Middle East or the Ukraine thing, which is now an event in the past, or China, that benefits, I believe, the Western world because people are always looking for a safe haven. You got to remember, when it comes down to it, greed is probably one of the key things that happens here with people are concerned about their wealth. So if we start to see things get out of control or unravel somewhat, whether it's in China or in Europe, people have a tendency to go where they ultimately will be treated the best. And in which case this would be, say, the US stock market and the US dollar, because traditionally that is still the kingpin. And that's what they believe. And to preserve their own wealth, they'll go where they need to go, and money will flow from east to west if necessary. So as things unravel there first. Now, if it's the other way around and things start really unraveling in the U.S. Or in this Western world, money will leave here and go somewhere else. But I kind of think we're going to be the beneficiaries of wealth coming in here, and that'll be in the form, I believe, it'll come into the, believe it or not, possibly eventually into the treasury bonds, but also into the stock market, even though we're at new all-time highs, and possibly even into the dollar. So the nice thing about it is it's an event that unfolds very slowly, so we can see it unfold. It's not a one-day thing. It's something that we're going to start seeing on the chart, saying, oh, money is flowing in, the dollar is starting to gain, it's starting to get a lot of strength. The stock markets are really on fire. So it shows money coming into this side. So I do believe that's what's going to happen with regard to the China situation being not a good situation right now. Money will flow into the Western side of the country, or the side of the world, I should say.
Maybe at a good time frame also. I was talking to some friends a couple of weeks ago about real estate here in Canada, and whether that's commercial or residential, there has been quite a boom in the last couple of years. They've done quite well, and the gentleman was explaining to me that a big part of that was the immigration policy here in Canada. So we're receiving a lot of immigrants, and we were also very, very robust in terms of accepting these immigrant student visas, which were also filling some of this real estate market. But we are seeing a slowdown or a softening of that over the last couple of months, whether that's a result of the hyperinflation, the economy, the uncertainty of the world. But now, making things maybe even worse, this article from yesterday, people are saying that the free lunch is over. The Canadian government just announced here that they're going to stabilize the growth and decrease the number of new international students moving forward. Maybe creating even more of a dent here in some of the issues that we're already starting to sniff out in the real estate. What's your take on real estate here, Canada specifically, with this respect, whether that's immigration or anything else, where we're going with real estate for 2024?
Oh my goodness, JC, I don't get an opportunity because 99% of my clients, because I've been in the commodity markets, are US based. And I don't get a chance to talk about things that are dear to my heart. And real estate in Canada is very dear to my heart, but unfortunately, I'm going to get a lot of hate mail because I really believe a year and a half ago, February, excuse me, which is when I sold my home and my summer home, was the absolute top in the market. I really don't have much confidence in the real estate market. Let me just go into it, as I said before, in a bit more detail. But again, please, no hate mail, because this is just my opinion and that's all it is.
Yeah. Appreciate it.
We were sucked into a situation where we had a massive multi-year bidding war situation in Canada where people bid more than the houses were worth. This went on forever. And the bottom line is, whether you want to realize it or not, is the government have control over the building and how many houses or residences are built. And they've tightened that so tightly over the past 10, 15 years. And even a gentleman named John Gilligan, who is the CEO or the president or the owner of Martee, said it takes the average 15 years to get a permit from inception to an actual hole dug in the ground, which is ridiculous in a country our size. Yeah. So I honestly believe, now again, guys, don't hate me for this, okay? I believe they're trying to crush the real estate market because companies like BlackRock and Vanguard want to own the houses so they can, in the future, control and rent them back to the people. And this goes with the WEF concept about you'll own nothing and you'll be happy. I firmly believe it. Now, what you've
This
seen,
this is a predatory tactic that we've seen set up here.
Totally. And I'm so, like I said, I don't get a chance to talk about this much because most of my clients aren't Canadian.
Right.
But think about it. What they've done is they had rates basically at zero. Then, even though Mr. Trudeau said the rates were not going to go up very blatantly, they pump it up to about 5%, and they're not letting it go. Now, there's two problems here. Number one, in Canada, we have a 5-year average term, unlike the US, which is 30 years locked in. Ours is about 5.
Yeah.
This started about 2 years ago. So most people are either half or 3/4 of the way through their mortgage, which means they're going to be renewed somewhere north of 5% from 1.5 to 2%. Okay, that's number one. Number two, most people in Canada have what we call a HELOC in the States, but it's basically a line of credit against your home. And most people use this like an ATM machine. Now, there's two classes of people, in my opinion, that are in the housing market. People that own their home, that worked all their life, they have it, they've paid for it. And then in the past 5-10 years, because of the advancements, what we've seen with prices, most people are trying to get a down payment of 20% just to get in a home. Now, if you take an average house in Toronto, even right now today, being somewhere north of $1 million, say 1.2 million, you're talking $200,000-300,000 down payment.
Yeah,
that's ridiculous. Okay, so what happens? People that are in their homes and have $500,000-700,000 mortgages went from 1.5%-2% to 5% or higher. They can survive for a while. So what they do is they say, okay, things are tough, but we'll start using our HELOC, start taking money out of our home because we do have equity there. And they use that to survive. They use that to pay their bills. They use that to pay their visas. But unfortunately, this is going to come to an end because you're going to get to the point where, number one, the HELOC or the credit line, JC, does not have a cap on it. Unfortunately, there's no cap on it. So people are finding that now they're struggling, and most people are. And not only the housing, but then you got the cost of food, cost of transportation. Now, right now, fuel is not that bad, but that will change as well. So what I'm thinking here is there's nothing really good on that scene in the next year or two. I think what's happening right now, if you go look at the numbers on the TREB or the real estate market numbers, they show that we're getting more listings, lower prices, and less sales, and that's just going to get
longer sales period too. The houses are
longer sales period as well. And as we go forward, and more people get to the point where they really just said, "Look, this is, and I got to get out of this." That will pull the pin, and when the prices start to get lowered, now there's a competition where people are going to be want to be the first one out that door. So I don't have much confidence in the Canadian real estate market. And again, I'm going to get a lot of hate mail, but hey, guys, open your eyes. This is what's really, truly happening.
So you mentioned the HELOCs or the home lines of credit, people using that to shore up the bills. In respect, I think that was probably 6 months ago. And if we're looking at the stats now, they went from using the home line of credit to now using their credit card. So now Canadians are missing mortgage payments as credit card debt is coming to a maximum also. So we're seeing all of that. And on top of that, I saw something by the CMHC, I think it was produced in November or maybe early December, suggesting that this March and April, a lot of those people who were in those 5-year terms, a big tranche of them are going to be hitting this new interest rate and double or tripling their mortgage payments. Now, to that effect, I've heard some banks and some people talk about these new amortization schemes where you can remortgage or refinance your house on a 60 or 70-year basis. Do you think that's going to work? Is that enough maybe to curb some of the damage that these interest rates are going to cause here? Can we get enough people under that so that we don't see the downside pressure? Or what's your take on that?
Well, here's the deal. How important is it to actually own your own home? I think it's overrated in the sense that most people don't really understand. They don't own their home. If you look at the average condo in Toronto today, it's maybe $600,000, $700,000, $800,000. If you had enough money to pay it off completely, JC, pay it out, 600, 700,000.
Yeah.
You still have about $1,000 to $1,500 a month that you have to pay for taxes on that property
Yeah.
and maintenance fees.
Yep.
And of course, the problem with the maintenance fees, and this is from experience from investing in real estate for the many years I have, there's no cap on that. When you're talking about rates going from, for common labor, minimum rates from $4 or $5 an hour back 20 years ago to $20 an hour, there is no cap. So just to get somebody to cut your grass for a company that does this, you're paying students $20 an hour to cut the grass. So you're never really going to own that home. Now, here's a quick example. When I sold my place 2 years ago, I've got this beautiful little new condo that I've got in downtown Guelph, and I'm renting it, and it's costing me $2,500 a month. Now, here's the situation. If I were to buy this place with a 25% down payment, first of all, I'm tying up 25% of my money. So we're talking $150,000 that I'm tying up in the house. Number two, the maintenance fees and the taxes are $1,000 or $1,500. And if I'm financing even $500,000 of it at 5%, we're talking over $5,000 a month net to own this place. And then you're at risk of what's going to happen with the market.
Yeah.
I'm renting it for $2,500. Why would I ever want to saddle myself with a burden and tie up my money and everything else for double that price? It doesn't make any sense. So to me, it's just not. And I think people that are going with these 40, 50-year mortgages have to do the math and realize that if you're paying $600,000 over 40 years, that house instead of $600 is going to cost you about $3 to $3.5 million if you do the amortization payments.
Is it the modern day version of indentured servitude when you get into the 60, 70-year-old loans? Maybe, and that could be for a whole other conversation. Let's go back here at the banking level. So when we're seeing the stress, we're seeing the policy change now. This may be all tying into this predatory situation. I had a book here and I talked about this, The Great Taking. I don't have it in front of me here now. Interestingly enough, a lot of legislation around the world has been put in place here for this next big crash and this next big taking. Again, could be for another show, but now we're seeing here that as the delinquencies are spiking, banks are granting fewer and fewer credit lines. So again, squeezing that market, creating the opportunities for these bigger hedge fund companies, you mentioned BlackRock here, to basically buy at 5 cents or 10 cents on the dollar when blood's on the street. So that's the setup we're seeing right now. Okay, a lot's going on there. Let's get into let's look at the stock market. Let's bring up your charts. Or do you want to go talk about Bitcoin? Actually, let me bring that up first. Hold on. Let's do a little segment on Bitcoin here, and then we'll get into some of your charts. So just this last news here was interesting to me. You talked about the ETF being approved. We saw a spike on that. Here we're breaking just below 39K here amongst this FTX Mt. Gox liquidation chatter that's going on right now. You want to start there? Do you want to start with Bitcoin?
Sure, we can start here. Yeah, let's do that. Okay, so right away I look at this 3 hours ago. And again, unfortunately, it's oh God, we could talk 2 hours about this, but the whole idea is most things that people read are detrimental. They're not. They're the exact opposite of what we should be saying.
Yeah.
If they're so smart saying it's below 39,000, why didn't they come out when it was 49 and say it's going down?
Mm-hmm.
Now what they do is they come out with fear porn and say, oh, it's going below 39. Well, guess what? I'm buying today. I bought this morning.
Right.
And the reason being is because, unfortunately, people don't know what to believe. News to me is either already factored into the prices or it's old and it's not a necessarily reliable source. And it's fear porn because when people are looking for an answer, they follow news and the news, unfortunately, doesn't give them what they really need. So what I did is with my own channel, of course, I did an alert for our members the day that Bitcoin actually topped out. And I'm going to play just 45 seconds of it for you here now. And this was the day they announced that the ETF, now we were anticipating it and we were ready for it, but I'll play it first, then I'll explain with today's charts. My reasoning on it.
Let me bring up your share screen here for the audience members. Sure. There we go. Go ahead and play the video.
All right, here we go.
Right now, I'm not hearing it.
Right now, it's not playing. I might have to share it myself. I do, I think. Okay, yes.
You're on your, yeah.
Hang on a second. Let me just do that. Stop share screen. Let me just do it again. Let me go back and get it.
It might have just frozen there for some reason if you were in full screen mode.
All right, here we go. Share. Okay, ready? Here we go.
So with Bitcoin, what happened was we had a run up. We got to 49. Now, this is the funnel we put in here last week. And the funnel runs out around another week from now. But we did have the spike that I expected. It ran up to 49.20. And then we lost it. Now, that's important. That loss right there tells me that that's it. Short term. I'm not talking long term. I'm talking short term. So I expect here 1 to 3 days minimum pullback from here, and possibly as much as a week or more. We could get down and challenge this 38 to 40,000.
All right, so that's basically it. Stop sharing screen. So that was done, as you can see here. This was done on the day of the announcement, and when I said that's it, it's done. We were at 46,000.
Yeah.
Okay. So how do we get rid of the screen share here? I just go back to where you.
Yeah, just go back to share now your trading view window, and I'll bring that up.
Stop that.
Bear with us, guys. There's a lot of different share screens to bring you for this episode here.
Okay, sorry about that, JC. I'm all over the place here.
No problem. No problem.
There's a new platform. I use Zoom, so this is why it's a bit confusing. So let's go ahead. Well, you want to share screen now? Let's look at our charts.
Yeah.
Let me pull it up here for you. Okay.
Yeah.
All right. Bear with me, guys. I'm an old guy, and I have trouble with this kind of stuff. Where are you? Here you are. Okay. Share screen. Okay, how do I find it here? Select a tab.
Yeah.
Here's my chart, but I can't seem to get over there.
You had it yesterday or the last time we did the show. So if you do share screen and then you select the window in which your trading view is in, and then share that.
Okay, so trading view is up. So share screen. It's under video file slides or share screen. Share screen.
And then there's tabs. You can choose window or screen. Go to tabs or go to your full screen if you want.
Okay, share screen. All right. Windows. Here we go. Sorry, guys. This is all new to me. I'm an old fella.
Oh, there you go. It's perfect. Okay.
All right, here we go. Sorry about that.
No problem.
Okay, I'm full screen here now. So this is the dollar index. And we follow this quite closely because, of course, everything is basically today dependent on the dollar. Everything we do, trade worldwide, it's all dollar, dollar, dollar. Now, of course, the dollar is a fictional little creature that everybody believes is so sacred. And unfortunately, it's not money. I refer to it as currency, a method of exchange. It's not money. It's a receipt for supposed to be money, and it doesn't really exist. Anyway, the last time we were on your show, I think right here, it was around the beginning or the middle of December. We were looking for the support level here at about par. What we see now is a move up to this box. You know, the box is, here's what's happening, JC, just so you know. You can see my screen, correct?
Yes, sir.
Okay. These boxes are built from the Oracle. The Oracle spits out numbers for me. And what I do is I encircle the numbers with a box. So in other words, the Oracle might give me 5, 6 numbers with a time as well as a price range. So here's the box for here. For this one, tells the date it starts, the date it ends, and the top and the bottom. So right here, we're in a resistance level. When you see a light color like this, it generally means it's resistance. This is support. And now we have to get through resistance. Once we get through resistance, it means something significant is going on, and possibly we're ready to move back to this top area. This is a day chart on the dollar. Now, if I show you a weekly chart, it looks completely different. Here's what we see in the weekly. But right now, let's go back to the day. So what we're looking for here is the dollar. If we can get through this area here, then we're going to possibly challenge this 107, 108 level. And that's the dollar index. That's a basket of currencies versus the US dollar. Now, ultimately, what could happen, I think, long term is this. As I said before, if things start unraveling in Europe, in the Middle East, in China, wherever, money looks for safety. And the money will globally go where it's treated best. In other words, it'll go where it will get a return. And of course, being the reserve currency of the world, the US dollar is respected for that point, at least at this point it is, okay? So money will flow to the West, and it will flow either into treasury bonds, which are generally are referenced as a flight to quality. Years ago, when I got back in the markets in 1985, I started trading. Anytime we have a bit of a market shuffle or a market crash, money would flow out of the stock market into the treasuries because it was considered a flight to quality. Quality meaning that it's safe. Personally, I don't believe that anymore. Personally, I think none of it is safe. But the point is, it still works. The traditional investors still feel that way. So right now, if we were to see a lot of disruption in Europe, in China, in Germany, in the Middle East, all of these areas over there, money will flow here to protect the investors themselves, and they will put it into things like whether it's the stock market or the treasuries or the dollar. That in turn could see a massive move over the next year or so in the dollar to the point where it's going to go back up and actually re-challenge this 115 level. Now, guys, we're not talking about next week. We're talking about possibly late this year or even in the next year. But again, it's one step at a time, because what you're seeing on these charts here are emotions. And as the emotions change from day to day, the charts change from day to day. And right now, we've got a very solid bottom in here. And it looks like we're going to get up through here. Eventually, we might pull back first. Once we get through, it's game on to challenge the top. And then from there, ultimately, we may end up seeing a massive blow off top on the dollar where it just goes ballistic. And then basically, whatever happens, happens. That's usually the sign of a top. So
Right.
We're not there yet. Okay.
You mentioned a few minutes ago with this news about the Mt. Gox FTX scenario playing here out with Bitcoin and putting downward pressure. You're a buyer today. What's your next move here? What's your expecting next? Are you buying today for the long term? Are you buying to make another move here in the next couple of weeks? What are you?
Are we talking about Bitcoin now?
Yeah, let's go back to Bitcoin. Yeah.
Okay, let's go to Bitcoin. Let's look at the Bitcoin chart. Here we go. Yeah. All right. So here's what we've got. Now, again, what I try and do is update these boxes and numbers because they change as the price changes. So the Oracle comes up with the numbers. It's like an algo that was developed by a bunch of professors with myself from South America 10 years ago. I don't fool with it. I don't know how to, but it's on a different computer and it gives me my numbers and I'm very happy with it. It's not perfect. It makes mistakes, but damn, it's good. So this day here, I want to show people, your viewers, when you see this, you see this one right here.
Yep.
Can you see that?
Yep.
That's the day they came out with the announcement. It went up and it lost it. That there is a telltale sign. That's it. Now, here's why. People say, well, the announcement came out. We have known, and back here, if you go back and look at our channel, this box right here, this was the breakout, in our opinion, of Bitcoin. And we said the bottom is in. And I have videos that said, this is it. We're going up. Well, everybody was looking for 8,000 and 10,000. Well, of course, as we get up and up and up, and this is all in anticipation of this ETF series that have come out. Well, of course, the old idea of buy the rumor, sell the news.
Yeah.
The day that they came out with it, the big corporations, the big funds, anybody in there were selling Bitcoin and Bitcoin ETF because they had accumulated it since back here. Why?
They're taking profits.
They're taking profit because for the past years, you tell me people like Jamie Dimon or Larry Fink didn't know this was going to be approved. Of course they did. They didn't wait until it was approved to buy Bitcoin. They were selling Bitcoin when it was approved that day. Now, here's the deal. Our numbers suggested that we should get back to about 38. And if you remember, that 38 is kind of funny because I'm sure if Joe was listening, we talked about this.
Yep.
This was a resistance level where Joe was planning on getting out. But Joe, hey, we're back to 38, buddy. But either way, the idea is once we get through here, now we're getting the correction and we're going to find support around this 38 level. Now, today, we're getting the first sign of a potential bottom. Short-term bottom, not a long-term bottom. We don't know. I can't predict where we're going to go in a week or two. All I can tell you is right now, today, around this 38 level, we got as low as 38.5. I personally have bought some Bitcoin this morning based on this. Now, if we do go lower into the next box, the box, as you notice, is a very dark red. The deeper we get into here, the more resistance there is and the better chance, it's like a spring, it's going to bounce. Now, from here, what do I expect? I expect a bounce over starting within the next 24 to 48 hours. I suspect we'll get a bounce out of Bitcoin, which could last for a week. It could last for 3 or 4 days, but at least the bounce. Once we get the bounce, we'll decide how it looks. But ultimately, I am very bullish on Bitcoin. And I believe anybody that understands the money that's been poured into the ETFs, the billions of dollars, it's not going away. But these people have scalped a 20% profit right off the top. So now it's time for those guys to go back in and buy back their short positions. And it will take a while. It may take a month or two. And I believe we'll be back up again, challenging 49 and probably a lot higher. But again, guys, don't put too much confidence in what you're hearing in the news. That's usually 180 degrees in the wrong direction. So again, I like Bitcoin in this area, and I believe we're within 48 hours of a short-term bottom here before we start to go back up again.
Right, very good. Jenny says, this is great info. People need to hear this. So yes, I appreciate it. That's why I have Martee on. Is excellent. Martee, as a fellow Canadian, this is breaking news. The Liberal government's invoking of the Emergencies Act during the Freedom Convoy is judged by the federal court here as unreasonable and unjustified. The ruling just dropped here a couple of minutes ago. So interestingly enough, those fringe minority Canadians.
Yes, and again, JC, don't you find it hilarious? So what? They found it. Why didn't they find it unreasonable when it was happening?
Right.
Now 3 years later. So what? What are we going to do about it? Anyway.
And you remember too, I was doing a live convoy reporting from Ottawa, in the minus 40 temperatures. And what was interesting, as this was going to the Senate for their final vote, they finally retracted this. But this was only after they had removed all the Canadians and the truckers from Parliament Hill. And there was a lot of rumors and scuttlebutt about the fact that even the Liberal senators were not going to vote for it. So that's why they pulled it at the last minute, not to be embarrassed. We won't know, but those rumors still persist. But here's the federal court now in the federal court ruling just saying today that no, it was actually unjustified, unreasonable, and it violated charter rights. I'm looking for that answer also as it pertains to mandates, to travel mandates, and forced vaccination, and the firing of federal employees. Maybe we'll get to that soon. But the wheel of justice is working slowly, but it seems to be working. Martee,
slowly, but unfortunately, that's the problem. I mean, they will have done what they're going to do to us. Even going forward, this is not going to get better, I don't believe, regardless. And you know what? Like, I don't want to get started on this because I don't get a chance to talk about Canadian things very long.
We should do another show just on Canadian politics.
But like I said, I might annoy a lot of your fans because I'm not on board with any of this stuff at all. I got my
neither are the fans. I mean,
it's pretty radical.
Oh yeah,
yeah. And anyway, so the next lockdown, and
did you see the Tucker Carlson episode just yesterday? He put out something on his Telegram. He's calling the Prime Minister's media line saying, "We're coming to Canada. We're going to save Canadians."
Well, you know what? I didn't, but I did see that clip. It popped up on my feed, just that clip by itself, and I go, "Really?"
It's just hilarious. It's hilarious.
It is.
Okay, let's get back to our meat and potatoes here and talk about gold here on Zero Hedge. Last night they were talking about this gold-backed cryptos, that this might be the next level of protection here for capital controls. Now we're seeing more and more of these CBDCs being introduced, and there's still a lot of interest, of course, in decentralized cryptos. This idea now of attaching somehow gold to some of the cryptos here might be interesting, and that might have an effect also on gold moving forward. Do you want to bring up your gold chart, Martee, and let's talk about
I can do that now. Am I
I'll do that for you here. There you go.
There you go. Okay, cool. Let me just move it to gold. Here we go. There's gold. Okay. Now, while you're on that subject, I just wanted to mention something else that popped up on my feed, and I tried to share it. It says this is not allowed to be shared. And what it was this beautiful looking girl, and she is advertising that Canadian corporations would like to take part in, let me get this right now. I've got it right here. Just bear with me. I've got to get it right. I don't want to misspeak, but I thought it was fascinating. I shared it with a few friends, but they wouldn't let me share the link. But here's exactly what it says. It's called the Canadian Digital Adoption Program. Ooh. So what they're saying is that Canadian corporations can apply for up to a $15,000 grant, meaning non-repayable, or up to, I think, a $500,000 no interest loan by clicking on this link. Now, my thoughts are on this that they're trying to roll this experimental CBDC out and tied in with this digital thing to get some people to see. It's almost like a test case, I believe. But I think we're very, very close to an announcement within the next year or so of a CBDC in Canada. I really believe that they're going to try and do that.
I think so too.
Anyway,
the Bank of Canada, just in December, I don't know if we missed the cutoff of our last episode, but they were announcing that they were trademarking a whole bunch of stuff here with respect to their CBDC. So they were taking the moves here as a normal business would do before going to market. So that's an indication at the speed they're moving and where they're at in the process of implementation.
I hear you. It's crazy. It really is. Okay, so this is the gold chart.
Yep.
And when we were on here with you the last time, so let me just go back to my own chart. So
this is you.
Date. Here we go. The date right here. So the 4th, we had this spike. We mentioned that date and it went right to our number. And we said, that's it. Same thing. See the tail? Exact same one came down. So we came down to our support level, went back up to our new overhead resistance, which was where this candle closed the full body of it. Now we're back. So we're in no man's land. So here's what I think about gold. I think it's going to be wishy-washy back and forth. To get excited about gold, we need to get back through this red resistance level, which is around the 2100 level. I believe we will. I'm not one of a believer that gold is going to 10,000 anytime soon or 20,000. I think it will always kind of maintain its value with regard to money, not currency. So it'll hold its value. But right now, it looks like we could probably go lower. I think we could probably head back down into the low 19s again. If it doesn't, that's fine. I don't have any other numbers. The Oracle has given me these numbers around 1925, 1950. But if we get through here, that's worth getting excited about. But right now, we're not getting through. So it's kind of in no man's land. And I do still think we're going to see $2,200 to $2,500 minimum this year. So that'll be a decent move. That's a 10-20% move over the next 6-8 months or whatever by the fall or possibly before. The beauty of this is if it starts up on a leg very quickly and we start seeing big moves like $20-$30 moves over a period of time, the Oracle takes that and digests it and says, wow, based on this, we're going here. So that's the way it works. So right now, the volatility and time is not there to be able to project that. But I do think once we get through here again, we are going to see higher prices this year in gold. I'm quite comfortable with that.
Okay, very good. Let's switch gears. Let's switch gears now and talk about silver. Where is silver going?
All right, so here's silver. Now, silver is a little bit different. We're almost closer to a bottom in silver. These numbers have worked so nicely. Overhead resistance, same day that the gold reversed, beautiful reversal on silver. Now we're coming into this buy zone. And again, guys, when I say buy zone, the way I do this is I don't tell people to buy anything. But if they are looking to get into silver on a futures contract or even buy physical, this is a better place to buy it right here than it would be up here. So this is an area that I would say a 21 handles what I'm looking for. Hopefully we're at 22.48, so another 50 cents or so. This is an area where it's getting tired and it's probably ready to start back up. Now, I do have a target that is still in place for this summer up around $27. And ultimately, I do think that if things continue, nothing has changed. The Oracle hasn't changed the numbers, but I am looking for maybe later this summer by the fall, $35 on silver. Now, I know that's not what people want to hear. They want to hear $200, $300.
600
aren't showing that. But when they start to move, we'll see that and we'll start getting ideas where it's going, because that's the beauty of the system. Because when you start seeing the volatility, it'll say, hey, here's new numbers, here's a new range, and then we put them on there. Right.
I was reading this article on Kitco earlier. Silver prices may be down, but they are not out. Bank of America sees potential for 2024. Are they saying that's strictly from a financial economic perspective? What's happening with the BRICS? Or are they looking at supply demand issues, productions of photovoltaic and new electrics? Why do you think there's so much upside and potential for 2024, as Bank of America is saying here?
Okay, so this is a really kind of a complicated affair here, because we're talking about a lot of our clients, your clients, my clients, that are hodlers or they're stackers, okay? And they don't like it when I say this, but you got to be realistic about this. I remember back in the summertime, we were looking at $18 premiums on Eagles.
Mm-hmm.
And I sold my Eagles. I said, hell yeah, I'll sell my Eagles. That's 50% of what the cost of silver was.
Yeah.
Because what you're really seeing, guys, is you're seeing a short-term demand for that specific token or coin. So what that means, the only shortage is really at the mint. The mint hasn't been able to keep up with the supply temporarily. The 1,000-ounce bars need to be melted down, or the other bars, to get these particular Eagles, okay? That's not the same thing as Sony needing 1 million ounces of silver. And a lot of these companies do deal directly, I'm sure, with a lot of the mines out there. So I believe silver will do very, very well. I don't doubt it. But there's a couple of things that you won't hear on most channels about silver, to be open-minded about it. Let's say we have, in an average town, 10, 15 dealers, small dealers. I'm not talking about people like Andy and people like that that can have huge volume. I'm talking about mom and pop shops. Most people that go to those shops go in to buy 5 coins, 10 coins, maybe cost average buy 5, 10 a week or whatever. And they've been doing this for years. Well, the problem is, if silver ever does have a big spike initially, what you might have a problem with is if you decide, wow, silver's at $40, I'm going to sell my tokens. You go to the mom and pop shop with a couple of monster boxes, and it goes, whoa, wait a minute. I don't need that much, because, again, they're small dealers.
Yeah.
But the demand, I think, going forward for silver is going to be huge, and I really believe it's undervalued. I believe it's one of the manipulated markets for many reasons. One, obviously, because it's always been money, not a currency, but money. And it's easily manipulated. And while we're on the same subject, I'll touch on 2 things here. The problem is, and I think we talked about this before, is if you are like a Monopoly game, the banker, you have unlimited resources. Well, somebody like a JP Morgan can literally sell $1 million worth of silver in one single hit by hitting the button and selling futures contracts, which in turn crushes the price temporarily.
Yeah.
And then they just walk in and buy back.
Yeah.
So that's one big problem with that being manipulated. Now, eventually those manipulations will probably go away, because as there is real demand, people will ignore the paper markets. They were really built for hedging, to take risk out of the market. And that's really ironic, because they don't do that. They don't act the way they're supposed to act.
Is that what we're seeing in China now, in Shanghai, with the physical exchanges, where there's an arbitrage opportunity right now on both physical silver and gold? They're sniffing out here this paper derivative market.
Of course there is, because the problem is, you look at the paper market and say, oh, silver's at $23. And these people that are worried about their currency being devalued because of the inflation with the money printing go to buy silver. And they go, oh, I'm not selling it to you for $23. So there you go. You got a real market and you got a paper market. Yeah. So that's always been an issue. But like I own a lot of silver. I'm very bullish on silver. But the thing is, you have to understand the whole thing, the whole enchilada. And there are a lot of little things. Like, for example, when Dick went away on his sabbatical, I call it, he went to Belize. He went to the dealer and we joke about it. He says, I have a few monster boxes. And the guy goes, I don't need that much. And so I think they gave him like $14 an ounce for it back then, because, again, he went to you can't move that stuff easily. But again, I believe in diversification. Silver, gold, real estate that's owned and paid for, or real estate has a positive cash income, some cash, cryptos. And if you're well diversified, I think you're going to be able to weather most storms. But the problem is, you can't put all your eggs in one basket.
Oh, no, for sure. Yeah. For sure. You mentioned something about melting down COMEX bars to get smaller denomination. I don't know if you saw this video, but Jeffrey Christian was suggesting that there was such a glut right now of silver eagles that they were melting those down to make COMEX bars. And so I had this conversation with Andy Sheckman. He says, how's that even possible? Why would you buy something at a high premium to melt it down to put it back to a big COMEX bar with very low premium? Did that make sense? First of all, did you hear this? Does it make sense?
I mean, why would it? Unless they purchased them originally at the original price. But
that's another story. Yeah. I don't think that was the case here, or if it was, it wasn't explained, or I didn't catch it in this video.
It doesn't make any sense. Really.
that was weird too. I don't know what he was getting at there.
Yeah,
but again, I'm not carrying his water. But when we do live shows, sometimes we do misspeak, we make mistakes, and hopefully we come back and correct it after we're shown if we actually did make a mistake. So,
well, yeah, look, doesn't make a lot. Same with Canadian maple leaves. Now they don't carry the same premium. I think our maple leaves now are about $3-4 above spot.
Yeah.
But why would you melt down a maple leaf, to make a big bar? It doesn't make any sense, right?
No,
It really doesn't. Yeah.
So
next one we want to look at, I guess, is we want to look at the stock market.
Yeah, let's go there. Yeah. So
All
we're 44 minutes in. We're doing well. We've got about 15 minutes left.
Okay,
so
perfect.
Yeah.
All right. So this one's very, very intriguing, and we'll have a look at it. Let me pull my screen up here. So what we've got here, guys and girls, and JC, is the Dow Jones. And of course, everybody knows what the Dow Jones index is, right?
Yep.
So what we had is we had this massive pump in the Dow Jones, and I think it was in here. It was. I think when we were here on your show, it was right here. It began to go in this box right here, the 12th, right here. Yep. Now it's gone in that box, and there's two scenarios here. When you get a market that's really had a big move, it does one of two things generally. It will either, three things actually. It'll either make a spike like we did in Bitcoin and lose it, marking a reversal, or it will have a correction like normal markets, profit taking, comes back down, you buy it, and we go back up. We stair step up. Or the third way is one that I'm really intrigued with, is where we go sideways. We do not pull back. That's a sign of a very, very strong market. In that case, what happens is a thing that I call recycling the system. So what happens here is, in this case, the market went sideways for a few weeks. There was no real correction. And now we're recycling, which means basically the whole chart pattern is starting all over again. And what this is suggesting, that there's a potential only. Now, guys, don't take this to the bank. This is not trading advice, but there's potential that if we don't make a correction in the near future, we could actually start a whole new leg, which could take us double the length, which would be up around 40,000 over the next few months on the Dow. Now, you got to ask yourself, before I go on with this, I want to show you one more chart that's important. Okay. And it's the NASDAQ. So the NASDAQ, there's the NASDAQ 100, and then there's the NASDAQ composite. The NASDAQ 100 is usually the one with the top tokens in it, or the top stocks, I should say. So here's the same chart. Only thing here, as you can see, we've already broken out of this formation, the same one on the Dow, and it's gapped up. You see that? Yep. That's incredibly strong. Now, this is all-time new highs. And you got to ask yourself, what's going on here? Because this is
on are they pricing in the quantitative easing that is being forecasted? Is that what we're seeing?
I don't think so. I don't think there's quantitative easing yet. I really don't.
Okay.
What I believe is money is looking for a bit of a safe haven with a return.
Okay.
So they're seeing this happening. It's breaking out. And now a lot of people, don't forget, we're short these markets because a lot of people have been calling for crashes for the past year or so. Yeah. But what the charts are saying, so you got to be careful here. There's one of two things. When you get a gap like this up, generally gaps mean something. And in this case here, this is a breakaway gap. Now, a breakaway gap means that we're just off to the races. Nobody's even going to get in here, because if they're not already in, why would you get in at a higher price when you figure it's already overbought? Well, the problem is it's not overbought here. A breakaway gap means we could have a whole other extension of what we're seeing right here. You see that move? Yeah. If you take that move and project it up from somewhere like here, it's going to bring you up to our Oracle numbers. Yeah. Now, here's the caveat, because there is one. If this gap doesn't hold, now we could pull back comfortably into this gap, into here. And I believe if it pulls back and holds, that's a confirmation that the breakout is legit. However, if we just diddle around here and gap back down and leave this gap, that's called a reversal gap or an island reversal. So you pick it. I don't know which one, but I believe I'm on the side that this is going to be a continuation of a massive, massive run in the stock market over the next few months.
As a perceived safe haven, that's where you're going.
As a perceived safe haven, because think about it. Again, election year. Who do you think can buy the stocks in these markets?
The plunge protection team.
Exactly.
The exchange stabilization fund.
They've even said what it is. That's exactly what it is. So, hey, it's an election year. Look at our stock market. Look how well we're doing.
It's great. Everything's phenomenal.
Yeah, now, here's the key, though, and I've said this on my own channel last week. I think there's too many wheels, too many cogs going on here between the stock market, the rate hikes, the inflation, the tightening, the QE, the war.
There's a lot of plates in the air right now.
Something is going to go amiss here somewhere. And I believe if that happened, that's when you would finally see a desperation move where they may come in and actually lower rates. That's where I would see rates potentially being lowered.
Yeah. Any type of black swan event and all of that.
Yeah. Now, if we do get this move I'm looking for, this could be up to a 20% move over the next 3 to 4 months.
Wow.
That big. Now, it could happen in a month. It could happen in 3 months. I don't know, but the charts are very strong. Now, if something were to change tomorrow, like if somebody were to drop a bomb or something like a black swan event that we're not expecting, of course, all this goes out the window.
Yeah.
But it's exciting times. Something big is coming down. It's going to be a very exciting year for everybody.
Yeah, and Zelensky was making the rounds here yesterday, saying they still got a shot, but they have to mobilize another million troops or so in the Ukraine. So I saw this article.
So
oh my God!
Yes, let me guess. They need more money.
Yeah, that's where I was going with that. Yes, that's good for the war business. Okay, two last things we want to do. We're 50 minutes in. I want to talk about copper. A few of our guests were talking about that today. They saw this article on Zero Hedge, the copper to gold ratio. Maybe if you want to bring up the copper chart. And I also want to talk about pork bellies as we're into the commodities here. U.S. pork bellies spot prices soar as supplies tighten. I'm curious to see what your chart would say about that. If there's anything indicating here that there's maybe opportunities there as well on the long term.
Okay, I'm going to have to find. I don't have a copper chart up. I apologize. I didn't.
No
just bear with me.
Yeah.
Okay, 1 second here.
And while you do that, folks, if you're looking at getting some gold and silver in your own possession, you can do so here at beyondmystic.net. These are the specials given to the Beyond Mystic audience here by Miles Franklin today. We have the quarter-ounce gold maples at 59 over melt value. The silver maples, here, these are the, is it 2023? I'm not sure, there's no year on those ones, but those are 375 over spot. And of course, the 10-ounce RCM, Royal Canadian Mint silver bars here at 275 over spot. So if you're interested in that, please do go check it out here at beyondmystic.net/silver. Marty.
Okay, go ahead. I did I share it already?
There you go.
Here we go. Okay, this is the copper chart. And I'll be honest with you, I haven't looked at this for a long time. As you can see, my pivot point ran out here, but let me just pull it up.
Yep.
Let's go back and let's look at the weekly. Generally, we like to look at the long-term projection first, and that is somewhat of a what we call it's a wedge, basically. And there's different kinds of wedges. This is kind of like a triangle pattern, and usually there's two types. There's either what we call a continuation pattern or reversal pattern, and in this case here it's really tough to call which one. I like it. I think it looks good. I think I'd be cautious if we take out the pivot of 350. It changes the dynamics. That's on the weekly chart, but it does look pretty constructive, and you can see how it's working its way into this funnel here. This means it's going to have to make a decision one way or another very soon over the next month or so. And I would lean towards the bullish side. I think we could probably break to the upside. And of course, we're going to have to get through this top area up around the 430, but I would be more favorable that it's going to go up. What I normally look for in this case is a break out of this pattern here. And then when we get up a little bit, wait for the check back and buy on the pullback. If it comes back here, find support, then there's a chance within the next year or so we're going to probably test this $5 level. So that's basically a rudimentary kind of a thing on the copper chart. Now you said pork bellies, or are you talking about cattle? Actual pork bellies?
They talked about pork bellies. Yeah, this one.
You know what was so funny? Back in the day when I got into the business, it was unbelievable how treacherous the pork belly market was. It was so corrupt because it was in the pits, and you had these guys that you had to trade with, and there was only a handful of them in there. Yeah. And you used to go limit up for 6 days and limit down for but I don't even know there is a pork belly contract. Now, pork bellies, of course, most people know is bacon, but I do know for a fact that what's going on, and this is a lot to do with our buddy over there, Mr. What's his face, Mr. Schwab, is
yeah, you gotta eat the bug.
Yeah,
you gotta eat the bug.
Close, baby. So we've had an incredible.
Well, all the fertilizer stuff, the farmers.
This is the live cattle contract, as you can see here.
Yeah.
Can you see that contract?
Yeah.
That's live cattle. Now, I think the live cattle top is already probably in,
Okay.
and this is a bit of a rally that suggests that we may have trouble and we may be on the way down. The chart is still positive, though. Having said that, it is incredible what's happened. Look at the price here. It was at $85 per hundredweight. Now it's at 187.
Yeah.
So it's up like 1.5x. And the reason being, JC, is we both know that they're talking about trying to get rid of cattle. And it's really funny because I'm sure he's going to watch today. I have a couple of really big clients that I've been with for many years, and they do hedging with me, like in obviously agriculture and cattle. And he is a Wagyu beef farmer in Western Texas. And I was supposed to visit him last week, and I got down there, and the weather was so bad. I said, I'm not driving over there. It was like -0 out in the plains. But I said to him one day, I said, so are you worried about close? He goes, yeah, let him come by here. Let's see what happens, right? He's got a massive ranch. But the point is, they're trying to do away with beef. They're coming up with excuses, which of course is going to squeeze the price of beef. I personally think that this year is going to be the beginning of a major price increase in most foods. And the reason being are varied. We're talking about fertilizer situations, man-made situations, and things that are natural. You're going to have weather issues that we're seeing even right now. That weather is just very disruptive. The things they can't control is going to be things like logistics and shipping costs. And now they're talking about like the Suez Canal and blocking it, and the oil situation and the Panama Canal. Like, they can control these kinds of things, and they can control the shipments, which can put a lot of pressure on the food products. And let's face it, we need food to survive. So I'm a big bull on what's going on. I think in most of the foods, we're getting ready to get real serious about all the grains, the soybeans, corn, and wheat. Using options, of course, because a lot of the options, you make your bet, and if you're wrong, you lose a few bucks. If you're right, you can do very well, because the commodity markets have notional values that are pretty large, and you can get hurt if you're not careful, don't know what you're doing. So yeah, it's going to be an interesting year for the foodstuffs, I think, as well.
We're seeing the farmers fight it out, as the Canadian truckers did a couple of years ago, and it's just getting worse and worse. But for the most part, the mainstream news is ignoring it. But if you're here on Twitter, you're seeing, oh my God, as Rob was saying just last week, he says we need to create some legislation to protect the few from the many. Like, you've got that the other way around.
That's a bit ass backwards. I wish the people would wake up. I really do. I mean, you know, like here in Canada, you got to be so careful because you say something to offend people, and it's so sad. I mean, people just need to give themselves a shake and see what's going on in the world. You know, it's kind of.
What's that quote from Star Trek? Let me see if I can bring it up. The needs of the many outweigh the needs of the few. Spock says that in his dying scene there in that Star Trek movie. Yeah, so Klaus Schwab, you need to take some courses here from this.
Courses, guys. Send them the video.
Marty, man, that was really cool, man. The hour went by so fast. Anything else on your radar right now that you're
no, but I would
members and let them know what they can find here on shift2020.com. You give some courses there. You have some one-on-ones also. What can people find here if they're interested in getting into commodities trading?
Okay, so we offer courses. Now, we do live courses, but right now what we've done is we recorded it back in May. We're not doing another one for a couple of months. So we have a big discount on those same courses that are recorded, pre-recorded. They get the link. They can watch the video as long as they want. That's one. One-on-ones are generally for people that say, hey, Marty, look, I don't want to read a book. I want somebody that can spend an hour with me and look at my portfolio and say, hey, I'm interested in doing something here. Can you give me an idea what I should be doing? It's just a general chat. It usually lasts an hour and a half. If you email me at bullshift2020@gmail.com, I can be happy. We'll accommodate you. But the big one that I want to offer your members is if you're interested in our monthly newsletter, when I say monthly, I do at least 3 updates, live updates a week, and it's hand-holding. And we actually help you set up your account in some cases and help you do some trades if you're interested, explain them. I want to offer your members a very special price. The last time I was on here, JC, we offered a 10% off the bottom price, and we didn't have the code ready. So I had to manually go back in and adjust them all. But what we're going to do, the price turned out to be $107 USD. So I'm going to offer for the next. Today is what? Today is Monday.
The 23rd.
Okay,
No,
for the
Tuesday.
rest of this week, rest of this week, I'm going to set our site up so that when you go in and sign up, it'll be 107 per month. You can take it for a month. If you don't like it, you can cancel it after your first month. There's no commitments after that. See if you like it, maybe not. But I'll keep it up in place till the end of the day, Friday, and you just go on. You'll see. You don't have to put in any codes. I'll make it open up to anybody that sees it for that 107 rate per month, and see if you like it. Because what we do is we talk about commodities. We show where to get in, possibly where to get out, the potential. We talk about cryptos, our buy spots, our sell spots. And we do a little bit of silver mines and things like that as well. So it's not for everybody, but if you're interested, again, send me an email at bullshift2020@gmail.com, and I'll be happy to reach out and fix it up for you.
Very good. Well, thank you so much, everyone, for watching. And please do go support Martee Hibs at bullshift2020.com. And yes, I'll bring the email back into the live screen for you guys as well. Where did it go? Scroll too fast. I'll put it in the description box below again, but it's on the page there too, guys. If you go to the services page, you'll see his email is right here, bullshift2020@gmail.com. So let me bring that back in the live link. Thank you so much, Andy, for being here. Martee, for being here today. What a great episode. Thank you for sharing all your wisdom for the audience members. I really enjoy it. And I guess we'll do this again in maybe 2-3 weeks from now. We'll see where the market
is. You know what? It's really enjoyable. I love talking to you. Of course, you're a fellow Canadian, so we talk about different things than we do on the other channel.
Right. Okay. Well, thank you so much, Martee. Thank you, everyone, for joining. And thank you, everyone, on Rumble. Also, please remember to like, share, and subscribe. And join us at 8 o'clock this evening for the Divine Feminine Oracle Show. I'll be having a special show with Sylvia and Meg Moonbeam. You guys don't want to miss that. That'll be on the Rumble and YouTube channel. I'm Jean-Claude. I'll be on Mystic. I love you guys. Have a great day, and we'll see you soon.
Thank you.